Welcome back, Money Vikings. Thanks for joining me. Today, I wanted to talk about investment opportunities when things seem out of control. So, what I'm talking about at the moment are some things like, for example, the debt ceiling debate that's about to emerge. So, this will prove to be one of those moments where there will be a lot of saber rattling and a lot of behind the scenes negotiations or not. But at the end of the day, the debt ceiling, the U.S. defaulting on its debt, I think we all understand this is not a political commentary, will be very bad for markets and for average Americans in general. If it did happen, if the full credit rating of the United States goes down and we default on our national debt. So, various political views out there, that's not what this is about. This is about you as an investor. So, years ago, wrote an article about your three big investing opportunities. I use the number three because, it's just an average number. There's a lot of investing opportunities. I really believe that after investing for 20 plus years, that every day affords an opportunity to invest. Because every day we have the opportunity to practice some frugality. We have the opportunity to purchase assets that we are interested in, hold them for the long term, and build a diversified portfolio. And the beautiful thing about the modern era is that a lot of this can be done with a few clicks of a button. That's not the way it was 20, 30, 40 years ago at all. So there's a lot more opportunities. Now, they're micro opportunities at times. You're buying a few shares here and a few shares there. But my point is this. What we should watch out for with the debt ceiling debate is this concept that it could create a bigger opportunity. So if you do have some cash reserves, and let's say the debt ceiling debate gets out of control, the market's probably going to freak out, probably going to go down quite a bit. Well, for me personally, again, we don't give investment advice. I would be prepared to come in and even pick up, shares of the VU or SPY at that time, because at some point this has to be worked out. Something has to emerge to calm everything down and move forward. And it's not going to go on forever because we would devolve into chaos and it would be really bad. And then it won't even matter what your investment portfolio is worth. So I would think it's going to be hammered out because that's what history has told us typically happens. This stuff gets hammered out, but it'll be turbulence along the way. And so because of that, I see opportunity. So, I'm pointing to this article where we wrote about being prepared for a bull market potential, which is, maybe we're being ahead of the curve. We're thinking out ahead. So it appears that the Federal Reserve may have raised interest rates for the last time for a while. Inflation does seem to have stabilized and is cooling, so that's good. So again, we don't want to be reactive to what's going on in the past. We want to be ahead of the curve. So now's the time to prepare for a bull market. These are some of the concepts we use: building a diversified portfolio with some cash. So, you never know year to year what each asset class is going to do. Sometimes small caps do better. Sometimes REITs do better. Sometimes mid caps do better. Sometimes growth stocks do better. Sometimes value stocks. Sometimes dividend players. Sometimes cutting edge tech, whatever. I think it's important to have a diversified system and portfolio. Bonds, stocks, etc. I particularly like diversified ETFs and funds. Because picking individual stocks can be quite challenging. I do have some, and I know a lot of you do as well, and that's great. Not a bad thing, but again, I would think about that in the totality of your portfolio. Investing regularly. So again, if you're just investing regularly, if there is a debt ceiling disaster or conflict, and you're dollar cost averaging every week or two into a VU or whatever, or SPY. What's nice about that is that week when everything seems like it's in free fall and it's chaos and the market drops, 500, 600 points in a day, that Friday or whatever, Thursday, you're going to buy more shares. So that was a good week for you in a way if you're a long-term investor and you're building a passive income machine. And the other thing I'll say is, the last thing I'll say about this is developing a strong psychological mindset. As investors, Gotta find a way to take in information, but ignore the day-to-day noise. Not ignore, I guess, the day-to-day noise, not react to it. We have to react to every single thing. We want to see long-term patterns, long-term trends forming. And then if there's moments like this where we can see that there's going to be a debt ceiling showdown, and the market's probably not going to like the uncertainty, it's probably going to go down. I don't know. We don't know. You never know any of this stuff. But typically that's what happens when there's a kind of chaos out there, or manufactured chaos. And so developing that strong psychological mindset is important. Staying disciplined and patient, managing your emotions, remembering that on any day-to-day situation, it doesn't really matter what your full account value is. If on Monday your portfolio is worth $200,000, and let's say by Friday it's worth $150,000. Well, if you didn't sell anything, you didn't lose anything. You're going long term. And again, there's never should be, for me anyway, there's never a day when you're taking all that money out. In the future, you're drawing income off of it. $5,000-6,000 a month at some point, or whatever it might be that's appropriate for you. So what it is week to week, I don't really care. I care more on an annual basis. I mean, over annual periods, I would definitely like to see, that 7, 8, 9% growth, some dividends coming in. Certainly don't want to see multiple years where things are just going down and dwindling, losing value. But if that happens, we have bigger problems. There's something wrong with the investing landscape, or the investments that I'm choosing are really not of good quality. So with that, just want to leave you with that nugget. I think this next debt ceiling thing is probably another opportunity that I'm going to look at. Throw some more cash that's on the sidelines into the market if things do go down. If you get one of those 500,000-600,000 point drops, whatever it might be. So take it for what it is, not investment advice, just sharing what we do and what we're thinking here at Money Vikings. Thank you very much for watching. Hey, check out True Wealth at moneyvikings.com. You can buy us a coffee if you check out our YouTube channel. Wouldn't mind that. It helps support the channel. Please like and subscribe, all that great stuff, and share as we grow our content. And again, we're trying to help you become as healthy as possible, as financially fit as possible. And we like to throw in a lot of fun stuff like collectibles and all that, where you can get together with friends and family and live a life of true wealth, where you're really enjoying your time together and just doing something plain fun that could actually go up in value over time as well. Thank you all for watching, and talk with y'all soon. Stay Money Viking strong. Take care.